Okay, so in this video, we'll be discussing the history of money or origin of money. We have here an article from Investopedia.com. Okay, so essentially before bills and coins were introduced, the way of exchange is through barter. So you have one person having this thing, and he would search for another person who probably has something he needed. Okay, so essentially it's an exchange of two goods or one thing to another thing. But there were challenges from that because, what if you can find a person who has the thing you wanted, okay? But what if someone found you and he wants to have what you have, but what he has to exchange with you is not something that you want or not something you need? And there's also the challenge of knowing whether the exchange has equal value. Let's say, are you willing to exchange, one cow with one pig or one chicken? So essentially can't really tell, or you're probably going to have to negotiate further with that. And so the invention or the introduction of money really helped with the exchange of goods and services. Okay, so going through the article, let's begin. Money in and of itself has no actual value. It can be a shell, a metal coin, or a piece of paper. That has been the case in prior years or prior decades, centuries. The first, there have been civilizations that used shell as a form of payment. Others have used metal coins, piece of paper, copper. Okay, currently we're all using coins and paper bills, right? Its value is symbolic. It conveys the importance that people place on it. Money derives its value by virtue of its functions. The functions of money: you have the medium of exchange. It allows the exchange of goods and services between people. A unit of measurement, because you can tell the value of a certain thing by how much amount of money you're going to exchange for it. So unit of measurement. And then you have the storehouse of wealth. If you can save up money, then you can say that that's how much wealth you have, right? Money allows people to trade goods and services indirectly. It helps communicate the price of goods. Prices written in dollars and cents correspond to the numerical amount in your possession, okay, in your pocket, in your purse, wallet. And it provides individuals with a way to store their wealth in the long term. So if you don't want to spend your money, then you can just, save it, put it in your wallet, in a piggy bank, or in the bank, and then later on, if you wanted to use it, then you can, take it out and then use it still, right? And it would still be acceptable. Key takeaways: money in and of itself has no actual value. Essentially, it's just a collective agreement between people that this paper bill, that this coin should be accepted as a form of exchange, and that the government is going to monitor or regulate the use of money because they're the ones printing them or, producing the bills and the coins, right? Its value is symbolic because it conveys the importance that people place on it. So essentially you have your, 20 pesos bill, and then you have your 100 pesos bill. Essentially they're probably made by the same materials, but they have different values. You have a 20 peso, and then you have a 100 peso bill, but the denominations are there because the government has made it that way, and the people have agreed that those are their values, okay? Where else? Before money, people acquired and exchanged goods through a system of bartering, which involves the direct trade of goods and services. The first region of the world to use an industrial facility to manufacture coins that could be used as currency was in Europe, in the region called Lydia, in approximately 600 BC. The Chinese were the first to devise a system of paper money in approximately 770 BC. Money is valuable merely because everyone knows that it will be accepted as a form of payment, and it's the government that guarantees their value through the legal tender statement. Do I have bill? Essentially, there's a legal tender statement on every bill that we're using, right? That the government guarantees the value of it. Where is it? However, throughout history, both the usage and the form of money have evolved. While most of the time the terms money and currency are used interchangeably, there are several theories that suggest that these terms are not identical, of course. A currency, I believe, is, uh, what they call this, exclusive for a particular country, or, the currency here. Our currency is Philippine peso. In the US, you have the US dollars, things like that. But both are money, but they are of different currencies, right? According to some theories, money is inherently an intangible concept, while currency is the physical manifestation of the intangible concept of money. By extension, according to this theory, money cannot be touched or smelled. Currency is the coin, note, object, etc. that is presented in the form of money. The basic form of money is numbers. Today, the basic form of currency is paper notes and coins, plastic cards, credit cards, debit cards. And we also have digital money. You have digital wallet, you have your apps, mobile banking, online banking, right? Wherein you can transfer funds by just clicking buttons, confirming, approving the transactions. While this distinction between money and currency is important in some contexts, for the purposes of this article, the terms are used interchangeably. Transition from bartering to currency. Money in some way, shape, or form has been part of human history for at least the last 3,000 years. Before that time, historians generally agree that a system of bartering was likely used. So again, barter, direct trade or exchange of goods and services. So let's say a farmer may exchange a bushel of wheat for a pair of shoes from a shoemaker. However, these arrangements take time because, for example, what if the shoemaker does not want a bushel of wheat because he already has some, right? He wants a chicken. Okay. So there's going to be complications. If you're exchanging an axe as part of an agreement in which the other country is supposed to kill a woolly mammoth, you have to find someone who thinks an axe is a fair trade for having to face down the 12-foot tusk of a mammoth. If this doesn't work, you would have to alter the deal until someone agreed to the terms. So it's going to be a lengthy discussion, negotiation. Slowly, a type of currency involving easily traded items like animal skins, salt, weapons, developed over the centuries. These traded goods serve as a medium of exchange, even though the value of each of these items was still negotiable in many cases. Because again, since they're still using things, commodities, some people would place very importance on it, but others would not find it as valuable, right? This system of trading spreads across the world, and it still survives today in some parts of the globe. One of the greatest achievements of the introduction of money was increasing the speed at which business, whether mammoth slaying or monument building, could be done. Chinese create object that resembles modern-day coin. So the Chinese moved from using actual usable objects, such as tools and weapons, as a medium of exchange, to using miniature replicas of these same objects that had been cast in bronze, so that's a metal. Due to impracticality, nobody wants to reach into their pocket and impale their hand on a sharp arrow. These tiny daggers, spades, and hoes were eventually abandoned for objects in the shape of a circle. No corner that would prick you. Okay, these objects became some sort of the first coins. Although China was the first country to use an object that modern people might recognize as coins, the first region of the world to use an industrial facility to manufacture coins that could be used as currency was in Europe, in the region called Lydia. Okay, today, this type of facility is called a mint, or minting, the minting process for the coins, and the process of creating currency in this way is referred to as minting. Yeah. In 1600 BC, Lydia's king Alyattes minted the first official currency. The coins were made from electrum, a mixture of silver and gold that occurs naturally, and the coins were stamped with pictures that acted as denominations. In the streets of Sardis in approximately 600 BC, a clay jar might cost you 2 owls or a snake. Lydia's currency helped the country increase both its internal and external trading systems, making it one of the richest empires in Asia Minor. Okay. Transition to paper currency. Around 700 BC, the Chinese moved from coins to paper currency. By the time Marco Polo the Venetian merchant, explorer, and writer who traveled through Asia along the Silk Road between these time periods, visited China in approximately AD 1271. The Emperor of China had a good handle on both the money supply and various denominations. In fact, the place where modern American bills say, "In God we trust," the Chinese inscription at that time warned, "Those who are counterfeiting will be decapitated." Okay? Counterfeit money is illegal. Parts of Europe were still using metal coins as their sole form of currency all the way up to the 16th century. This was helped by their colonial efforts. The acquisition of new territories via European conquest provided them with new sources of precious metals and enabled them to keep minting a greater quantity of coins. However, banks eventually started using paper banknotes, much more convenient, okay, for depositors and borrowers to carry around in place of metal coins because they are heavy. These notes could be taken to the bank at any time and exchanged for their face value and metal, usually silver or gold coins, because these were monetary standards before, right? We'll discuss that in a separate video. This paper money could be used to buy goods and services. In this way, it operated much like the currency that we have today. However, it was issued by banks and private institutions, not the government, which is now responsible for issuing currency in most countries. So it has been, centralized and regulated by the government. I think there has been a time when, it's not the government that issued them, and there has been numerous, inflations because these people kept printing money and, too much money in circulation that led to inflation. So it has to be regulated. The government took over, I believe, is what happened. The first currency issued by European governments was actually issued by colonial governments in North America because shipments between Europe and the North American colonies took so long. The colonists often ran out of cash as operations expanded. Instead of going back to a barter system, the colonial governments issued IOUs. So we have now the concept of borrowing or credit. Okay, the first instance was in Canada, then a French colony. In 1685, the soldiers were issued playing cards denominated and signed by the governor to use as cash instead of coins from France. Currency wars. Okay. The shift to paper money in Europe increased the amount of international trade that could occur. Banks and ruling classes started buying currencies from other nations and created the first currency market, so some sort of foreign exchange. The stability of a particular monarchy or government affected the value of the country's currency. Essentially, in Europe, you have, it's a large continent and it has various countries on it, so they really have, in a way, transactions between each countries do take place, and so they have that foreign exchange going on as early as that time, right? And like here in the Philippines, we're very apart. We have no neighbor. We do have neighboring countries, but for us to, transact with them, it's either, if this was before, before the invention of transportation, so it would not be possible to transact with other countries because archipelago, islands, surrounded by seas. Anyway, going back, the stability of a particular monarchy affected the value of the country's currency and thus the ability for that country to trade on an increasingly international market. Because again, during that period in this particular continent or area, the countries are side by side and transacting with each other already. The competition between countries often led to currency wars, where competing countries would try to change the value of the competitor's currency by driving it up and making the enemy's goods too expensive, by driving it down and reducing the enemy's buying power and ability to pay for a war, or by eliminating the currency completely, okay? Which is a bad thing. Currently now we have World Bank, we have international financial organizations that in a way help in ensuring that currencies are being exchanged, especially foreign currencies, trade between countries, to be fair, right? Mobile payments. The 21st century has given rise to two novel forms of currency: mobile payments and virtual currency. Mobile payments are money rendered for a product or service through a portable electronic device such as a phone, smartphone, tablet device. But The thing about mobile payments is that essentially it's still being backed by, your paper currency or your fiat money, right? Mobile payment technology can also be used to send money to friends or family members. Increasingly, services like Apple Pay, Google Pay are vying for retailers to accept their platforms for point-of-sale payments. Virtual currency, this is a different matter altogether because these are not supported or regulated by any government, and there's really, who is actually valuing these currencies? That is the question. Okay. Bitcoin, released in 2009 by the pseudonymous Satoshi Nakamoto, quickly became the standard for virtual currencies. Virtual currencies have no physical coinage. The appeal of virtual currency is it offers the promise of lower transaction fees than traditional online payment mechanisms because they are unregulated. And virtual currencies are operated by a decentralized authority, unlike government-issued currencies. Okay, so that's the thing. I will probably have a separate discussion on virtual currencies, but maybe later. The bottom line, despite many advances, money still has a very real and permanent effect on how we do business today. Okay, of course, we do need money to make exchanges, buy things, goods and services. Okay, so that's it for this one. Again, we've had, history of money and origin of money, essentially. So that's it. Thanks and bye.